Welcome back to our portfolio series. In this video, we're talking about technical analysis. If you search the internet these days, it feels like everybody has become a chartist. You have hobbyists and day traders chiming in on how to use these charts to help your trading. Here at Cobblestone Asset Management, we're running institutional quality portfolios, and we're using technicals on a day-to-day basis to improve our timing. In this video, we're going to go over some of the key things you're going to be seeing in the charts. We've got a deeper dive video on both conventional charting and point and figure. So if you're already familiar with technical analysis and you want to jump right to those deep dive videos, go ahead and do that now. For those of you that want an overview, let's jump into it. So a quick definition of technical analysis. In this analysis technique, we're using price and volume to learn more about a security and to increase our chances of being able to predict the behavior of that security. There's other types of analysis you can use to review a stock. You could be looking at fundamentals, you could be looking at valuation metrics, you could be diving into financial statements. This video focuses purely on technicals. Some of the things that we can learn from charts: we can identify support and resistance points, we can determine trends. Are there upward trends, downward trends, or are we in more of a trading cycle at the moment? That's a useful thing to know when you're buying or selling an investment. The last piece is our entry points. So if we've done some fundamental analysis or other research that identifies a position we want to be in or a position we want to get out of, we can use technical analysis to confirm or point to an optimal point to either enter or exit a stock. So the OHLC bar is what we like to use when we're graphing our charts. Oftentimes you'll see that it defaults to a candlestick. We've had success using the OHLC. It shows you the open with this left tick, shows you the high and the low on the day, and it shows you the close with the right tick. So this one piece of data here gives us, in this case, a stock that opened and closed on a positive for the day, and we can see the volatility within that day. When you add overlays and various things to this, it's very useful information to have. Now let's take a look at some of the overlays and indicators that we have success with. First one is the RSI, or Relative Strength Index. If you've heard an analyst refer to a stock as overbought or oversold, they're using RSI. They say this stock has been punished. That's because they're seeing the RSI at low levels, indicating it's been oversold. We also like to use the moving averages. The 50 and the 200 day give us a lot of useful information. They become support and resistance points for a stock price. We also look at how the moving averages interact with each other, so the 50 can cross above or below the 200. The reason this is useful, the 50 is going to be much more reactive. So if the stock price has a dramatic move upward or downward, that 50 is going to be moving closer to the price. The 200 day, because there's more data calculated into that average, it's going to be less reactive to a price swing. We use Bollinger Bands as an overlay. You'll see Bollinger Bands expand wider and then contract to be narrow around a stock price. Bollinger Bands give us a sense of what type of volatility might be ahead. It does not speak to the direction, so it could be an upward or downward move, but it indicates there's volatility or a lack of volatility in the near future. When you use Bollinger Bands in conjunction with some of these other indicators, it's a very useful tool set. Now, one thing I want to point out, we're all used to watching the weather. The weathermen have a lot of tools at their disposal. They use these tools and they oftentimes get the weather right. The reality is sometimes you're going to forecast and something else is going to happen and your prediction or expectation is not going to come to fruition. You're going to remember those times when you got it wrong more than when you got it right, and certainly the people around you. So if you're using technical analysis to give someone an opinion, they'll remember when you got it wrong. Hopefully they'll keep in mind that you occasionally get things right. Another type of charting that we find very useful in our portfolio management is point and figure. So this can oftentimes confirm and sometimes deny the thesis that we see playing out in our conventional chart. I'll give you a quick overview here, and again, we have a deep dive video if you want to get more detail on point and figure charting. With point and figure, we have columns of X's and O's. When there's an X, it means demand is in control. That's a bullish indicator for stocks. When you see a column of O's, supply is in control, and that's more of a bearish sign. In our video, we'll get into what makes these X's and O's appear and some different takeaways you can get from the shapes and patterns. In those videos, we look at an actual security and I give you my takeaways. Where's the support? Where are the resistance? What are the trends? and I speak to the different indicators and overlays that we've just reviewed in this video. Go check that out. We hope you enjoy.